My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people, my friends, just trying to make some money. My job is not just to entertain, but to educate and teach you, so call me at 1-800-743-CNBC or tweet me at Jim Cramer. Be careful what you don't wish for. That's all I can say about a day when the fundamentals matter again. Not some broad, sweeping thesis or some speculative nightmare. That's why I'm encouraged, even though the Dow lost 165 points, S&P shed 0.29%, NASDAQ declined 0.03%. Believe me, it was much worse during the middle of the day. Those numbers were in the red, but make no mistake about it. Today was a victory for the rational bulls. For almost a year now, we've been gripped by a ridiculous level of speculation around here. We've had a two-track market. There are the people who buy their favorite assets at any price, and the people who make broad, sweeping bets based on top-down economic analysis. Call them the crazy market and the somewhat sane market. The crazy market wishes that we'd all convert to their errant ways. These are the people who somehow decided that GameStop is the most important stock in the universe, with the possible exception of AMC, two companies with dying business models. GameStop's being left for dead by digital downloads, while AMC struggles with a world where people don't want to risk catching new COVID variants while they watch Godzilla versus Kong. They love their cryptocurrencies. They'll buy anything coin from Bit to Doge, although they think that Ethereum is superior because it's favored by people who buy non-fungible tokens. Basically, an emperor with no clothes seeks to buy no clothes. These are the same jokers who ridiculed me when I cashed out most of my Ethereum and Bitcoin near the peak in order to buy a 120-acre farm. A true non-fiat asset, a fungible, more than token slice of land that can hold up even if all my fellow landowners are borrowing gigantic amounts of money to finance similar purchases. Speaking of borrowed money, if you want to know why something like Bitcoin can plummet so fast, it's because many people, in totally unregulated fashion, of course, because the SEC doesn't know anything about it, borrow huge sums of money to buy these things. So when the momentum turns, well, then they're forced to liquidate. At least with land, you got something tangible, even if the price collapses. You can grow crops on land, maybe cannabis, a dynamite cash crop if it becomes legal nationwide. Needless to say, I feel pretty good about ringing the register on Bitcoin and Ethereum, of course, at much higher levels. Hey, come on, I shared every bit of it with you, every bit. There's a reason I always tell you to take profits while you have them, and I've been very, very clear about doing so because I don't want you to get hurt. Now, the speculative cohort has a champion, and her name is Cathie Wood, who runs ARK Invest and pushes what I call the Wood stocks. Two-in-one show. These were some of the biggest winners of 2020, but they're getting crushed this year, in part because it's a different market. Many of the Wood stocks have real issues, though, like Iovance, which plunged 40% today when its CEO resigned not long after the company announced that its lead experimental drug was delayed. The CEO is leaving to pursue other opportunities. I hope they're good ones. No need to worry about the fact that Cathie Wood's the largest shareholder of Iovance because she's invested in a host of other companies, some of which are connected with Bitcoin, although not always in a positive way, like Tesla, which has said they're not going to take payment in cryptocurrency anymore. Never mind the crypto collapse partially caused by Musk's about-face this morning. Wood told Bloomberg that Bitcoin's going to $500,000. $500,000. The $1 trillion it lost in value today alone, I thought that was significant, but maybe that was just a pimple. What a relief. I feel better already. Now, I guess that it's not a problem that it's down 39% from its highs in just over a month, in part because Elon Musk going from proselytizer-in-chief to critic-in-chief. Cathie Wood remains unmoved. Wood told Bloomberg she expects, and I quote, Elon will come back and be part of that ecosystem. Was that like Shane coming back or something? You can't make this stuff up. Today, this crazy speculative track broke down. But what about the second track, the sane track, the people who do exhaustive homework to get an edge? Rather than loading up on cryptocurrencies that rise or fall based on the ratings of a particular Saturday Night Live episode, cryptocurrencies that make the U.S. dollar look like it's actually backed by gold, these people bet on individual stocks because they like the fundamentals. It's actually called investing. Today was a banner day for investing. It started with a Target conference call starring CEO Brian Cornell, where he outlined how he's got the brands people want, house brands with huge margins, think Cat and Jack, along with the supply chains that other retailers envy, because he was ready for the great reopening. We got all this stuff from Shipped. Anyway, the e-commerce platform consumers need, which can give you same-day up-shipped creek with a paddle. Oh, no. Anyway, finally, the service. They give you the service that people crave, okay? Because Target pays more, has terrific loyalty, and historically has given back more to the community than any other retailer. Have you ever tried to hit them up for anything? I once called them for some of the charities I run. They're always like, hey, do you want this stuff wrapped or not? I mean, no one even gives me anything. They'll wrap it. Cornell's conference call is a primer on how to handle the post-pandemic era, making it clear that as well as Target did during the lockdown, it's doing even better now that the great reopening is upon us. Thank you for saying that. His quick switch to fashion, particularly those fantastic house brands. Well, then they're not for everybody. He switched in cosmetics, too. This is brilliant. This is the stuff people need after a year where it didn't matter what you wore because you were stuck inside. That's how a stock closes up $12 on a very nasty day. This stuff, Cat and Jack. I mean, everybody loves this stuff. I'm not kidding. I find it tight. Or how about the rediscovery of individual tech stocks? Cornell doesn't make bags that can stay on stands. Anyway, how about these some neurotic ETF that tries to lump a bunch of semiconductor names under the same umbrella, like they have less variety than potato chips, let alone microchips? That seemed to be a news story today. Well, it all started when Lisa Su, the CEO of Advanced Micro Devices, announced a $4 billion buyback. I think she's sick and tired of watching her stock get dragged down by the weakness at arch rival Intel, which is always quick to badmouth AMD, even though AMD's eating their lunch. Then Broadcom got some lift after J.P. Morgan speculated they might have won a contract to develop artificial intelligence processors for Alphabet. Meanwhile, ADI, Analog Devices, the best of the everyday semiconductors, that go into all sorts of machines, including the Internet of Things, reported an incredible quarter. They torched the estimates, raised their forecast. Remember, the whole semiconductor complex has been decimated of late. It's been the worst group in this market, but other than the Woodstocks. But if things are really so bleak, how come there's all this good news? I mean, I'm getting a little tired of hearing the bad news. As a matter of fact, if I hear more bad news, I'm going to come out in these tomorrow. Even better, a video game outfit we have on tonight, Take-Two Interactive, managed to beat the revenue guidance this year by a cool $1 billion without even introducing any huge new games. Of course, Take-Two's got a fabulous catalog, including Grand Theft Auto, the most successful entertainment property of our time. Sorry, GameStoppers, unlike the old days, you don't need to buy this stuff from a store. You can download it right to your computer or your console. I think there's no room for GameStop to break into digital distribution, but surely putative savior Ryan Cohen knew that when he staged a bloodless coup and took over the company to the cheers of the Wall Street Bets mob. Yeah. Do you detect a bit of pique from Jimmy Chill? Don't worry. I'll be right back at you with all the positives about Oatly, the Swedish oat milk company that's about to come public with a $10 billion valuation because they, whoever they is, told us they're the most successful alternative milk company of all time. I guess it depends on what you mean by successful. 4 years ago, Dean Foods sold White Wave, the soy and almond milk business, to Danone for $12.5 billion. At the time, White Wave had $4.2 billion of annual sales. Last year, Oatly only had $421 million in sales, about a tenth of the numbers White Wave was putting up when it got acquired for roughly the same price. I guess the joke will soon be played on us. They always are, aren't they? Here's the bottom line. It's nice to see homework get rewarded with excellent gains while hubris and chance finally strike out. So I wouldn't be too worried about the ongoing speculative meltdown as long as you own some sanity stocks to go with your crypto, GameStop, Ether, AMC, non-fungible SPAC.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.